Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So pretty quiet day after last week's big move that we saw Thursday and Friday. So if you think about where we were Wednesday's close to where we were today, I would say more constructive or more neutral to positive versus neutral to negative. And although I think most guys made some of their money short today from a micro tactical approach, at this point it does feel like the bigger money will be made buying, up here if we don't pull in more, or some of the best acting stocks that have been performing pretty well since earnings, and we've been starting to create a decent sized list of them that are acting well. That we saw some nice tactical moves on Friday. They're digesting, and we'll see if it can continue. If you look at the chart of the S&P, you'll see that here is when that Tuesday, Wednesday of last week when things looked like they were breaking down, and then you had ECB's comments, and pow, right back into the middle of this channel, this ascending channel that's been in place since the lows that was put in on June 4th. And this was your spot to switch some gears. This was your spot to say, okay, we didn't break below, we're back in the channel. I'm not going to be just a full-fledged opinionated bear. I'm going to just trade the action. And if you didn't do that on Thursday, you had another chance Friday. So now lo and behold, we are up here. If you look at this little series of highs, the high that was put in, which was a high of the market on April 2nd, and then somewhat retested right here on May 1st. This was the first time we really made a higher, not say a higher high, but broke this trend here by getting above 138.18. So as far as having an inside day above this area, you could pretty much draw your line across. I would say the longer we stay above this 137.90 or 138, the more these bears or these rolled up shorts that didn't cover after this move, or didn't cover here, or didn't cover when we took out this 136.45 high, they're going to be thinking, what do I have to do next? Same way you had a small little push when we got above 139.07, and then it failed at I wouldn't say failed, it just didn't have the strength to continue based on where we came from. So I tweeted a small little strategy, and guys on the floor saw that I came in flat to spiders. I actually was short last week, got stopped out earlier than the highs, and it could have been bad. I still lost a little bit of money in it because I was somewhat neutral to negative until Thursday midday or maybe even Friday morning. But anyway, so I said, since I covered my shorts and I'm not just rolling them up in an emotional wreck, I could look to see if there's a tactical play there. So if you go back to the chart of the spiders, so you could see, I wrote down 139.07, knowing that if we traded through here, anybody rolling up shorts for the last 4 days or rolling them up since here probably get squeezed out. Any chases come in, and then typically you could get a little bit of a reversal. So just to explain it, because guys keep asking what is the red dog reversal, I'll show it to you on a few different time frames. So this was the high, okay, right here from Friday. Okay, so what happened off the bat today was we traded through, so you had a bit of a squeeze. Anybody trading short versus that high, 139.07-ish, got squeezed. And then on this chart, which you could look at it as if it's a daily, you had a tactical red dog reversal on the 5-minute where it traded above 139.26 and came below. And then really right around here, I said, you know what, I'm going to short a little bit, around 139.05, I think. Give it to the highs of the day, which is about, it was at the point, it was like 25-cent risk, and see what it could lead to. So after a little bit of time, some of the financials weakened, some things started trading off, and it turned out to be a decent trade. Not a blockbuster trade, but traded below. I think right around here is where, this was the low of today. And I said if we break 138, I think it was 51, could get another push, and then we broke it, and then I covered, I would say 85% of the short in the spiders into this move, because that's all I was looking for. I was looking for a tactical micro scalp, and that's all that was. And then on my leftover, on this little bar right here, when looked to be coming back to the upside and holding the majority of the afternoon move from Friday, I said that's all I wanted. So at this particular point, you go back to your daily chart. That was your cash flow trading. Now, I would say the longer we go sideways, like just say tomorrow's another inside day, going into Wednesday, the higher the probability we continue to the upside. So even though there was short-term tactical cash flow right here, the bigger trade could be is if we hold above this 138 over the next few sessions to potentially, continue. Now we still have, like I said, we have the two-day meeting from the Fed, Tuesday, Wednesday, then you have the ECB Thursday, you have claims on Thursday, and then you have the big number Friday. So there's a lot that's going to dictate the movement. But you've also had some earnings, some stocks that came out that, we've talked about the stocks that gapped up on earnings and held above that gap, and those are the ones to stay with. And you have a crop of them. So if you look here, I'd say, I know Amazon is something that fundamentally I don't really understand that well, but technically, guys made some nice money when it traded above 230. Who cares what the earnings said, I guess. Sometimes maybe it's forward looking. And then today, it took a bit of a rest. So I think what momentum traders are going to try and figure out is you have this move, into the high here of, 240.74. The question is, does it hold this upper flag? Okay, so can you buy it versus this 234.07, or does it come back and retest this 230 area? But I think if it comes back and tests this 230, you have to try and buy it. Hopefully it holds it. If it doesn't hold it and trades back into this area, it doesn't deserve your attention as a momentum long. If it, first of all, holds above this area, it's just pent up. So I think this is the area. So people who are trying to figure out a dip to buy, you have a question, there's a question mark. Is it 234 or is it 230? And the same goes for something like a Google. Google, which, had a really nice trade after earnings, okay, or a really nice setup. Here's when earnings came out, it gapped up. Remember that day the futures were down, they bought it. It was really nice and coiled here. On Friday, guys had a nice entry if they weren't in there, above 618, went as high as 635, and then today it triggered above 635, went into this major downtrend, the 642. If you look here, you have resistance on a macro basis at 653, another macro line at 658. So it really came into it, just wasn't ready from where it came from. So the question is, even on something like Google, first of all, Google on a macro basis is looking much better. Okay, it absorbed two different earnings shortfalls. Okay, one, where was that one? The first one? Let's go to the daily. So I could, let me just, there was two right here. Okay, this is when I had the breakout failure. So it gave you a little clues that it's not ready yet. And that's when I had to unveil my stocks of 2012. Walmart was one, and actually Microsoft and Google, those were the three, as far as regular stocks. So anyway, this was the breakout failure. Here's where, it came out with earnings and it didn't meet the street's expectations, but held the 200-day. Rallied all the way up again. This one wasn't so hot. Sold off right away, showing you not ready yet. But still, institutions supported it. Institutions held Google above this big long-term trend line, or this big macro support of, 555. Then finally, good earnings, or at least decent earnings, and nice little push-up. So the question here is just to take it back down to a tactical approach. Just like in Amazon, can you buy it versus now today's low? That's what you should be looking at, this 629.50. Or does it come back and retest where it just broke out from? Because look where it was. It was as low as 560 all the way to 644. That's about 80 points. So first day, is that the day that you want to be buying in if you're not committed to it? So I think that's what momentum traders are grappling with. People that missed a move, they want to buy it. But if you buy it here and it pulls back to 620-ish, can you actually stay in it for what could be higher prices at some point? Because as of now, it does seem as though we're going to be taking out this high at some point, 665, the high of the year. Now everyone likes when I put the probability there, I say that 75% chance. That's my, that's my probability that I use when I'm thinking something's going to happen more than it's not. I would say 80%. That's not the high of the year, as far as Google's concerned, that we could see that 750 plus, especially, if next quarter is shaping up the way it should. This could be explosive. You thought Apple had an explosive move. This one hasn't done a thing in 4 years, and when they only had one business, now they have like 5, if not more. So anyway, that type of question mark is going on, which is what's going on in traders' heads right now. Like, is the first day down the data position for what could be continuation, or do we need to hang out here for 2-3 days, or is there no commitment? And as of right now, you have to say there's commitment. As far as some things that pulled in a little bit more than people would have liked, I would say, JP Morgan somewhat, it was downgraded today. Again, a lot of guys were saying it was damaged. It wasn't really damaged today. You had a big move from this trend line all the way up to the 200-day into the gap. Today was somewhat of an inside day. I remember, I think I tweeted this area. I was like, what? JP Morgan's down a little bit more than it should. It should hold 35, 75, 36. So it did. If it goes sideways here a little bit more, maybe it could continue. That'll help the market. From a tactical approach, I made the money in Goldman short actually today. It did the same thing as the spiders kind of. It tried to push through. There was no follow through. So it was just a small little trade. And you look where Goldman Sachs came from. It had a really nice 5-day move, pushed through real quickly through this 102.05. And they gave you a small trade. Now the question here too is, people want to see, can I stay with Goldman Sachs if they're trying to, be long it? So question is on day one, do you buy it here? Probably not, but if it comes back and retests this area and the moving averages catch up, can you buy it around 98.50? That'll be the level to check to see if there's any commitment here to this, 5-day move in Goldman Sachs. This move here was the most potent move we've seen in this stock to the upside since May. If you look, so that's showing you something. So now the question is, does it continue? Can you hit the 200-day there? So it's something to watch. As far as LVS, Thursday we put in off the charts that finally some capitulation. Finally, maybe the earnings, the bad news is out of the way. And I know it was a little wishy-washy on Friday, but it never violated any of the stops. And if you look at it, nice trade. Not a blockbuster trade, but I think last time I was here, this is what I drew. So at this point, you go back and you put in your basic studies the reason why. You go to your volume and you say, okay, this was a pretty substantial day. If you look where, you remember this outside day up here, you had one, you had the reversal day here in with volume, and you take this out of the way, and it feels like, I did sell some into 37.5, 38, which was level 1 resistance. But if you want to hold a little bit, which I think the strategy I put on stock tweets, I said I'm going to hold unless it broke the low. And even on on Friday when it did look as if it wasn't participating, it still never broke this low and held pretty much halfway above it. But whatever. So now I would say as long as it stays above, just say this 36 area, I'd say 36. Would be a nice area for it to hold. Then perhaps with some sideways action, we can get another few days here, and then you have a pivot to trade above 38.29 for what could test more of a macro downtrend, which comes in around 40. So not a block burner trade, but at least you knew that you had a pattern, you knew you defined risk, and so far if you're out of 75%, it worked. And all we're trying to do is find things working, make money. It's the summer. I read through the Twitter sphere and everyone is so damn negative. It feels like it's the cool thing to do is talk about how, things are in doomsday scenarios or things can't be sustained or whatever it is. Technicians are looking at the market and saying, oh, we like what we see. The smartest people or people who claim to be the smartest people say there's no shot in hell that it holds up. So for me, I'm trying to read a little less and I'm going to try and just read what I read pretty well. And to me, that's the charts. And right here on the daily chart, you see, we're still in this ascending channel. Tried to break below, couldn't, came right back above. Might need some time here, but then, we're in the process of breaking this last, this last pivot. So you hold above this, you can continue. And I showed you the weekly chart this morning in what's it called, in Morning Call. And if you look here, here's the low. Okay, this was, I guess, just to do it real quickly. Here is your high, another high, and you have a higher high. Here is your low, higher low, another higher low. So if we take this area out, 1420 in the fall, there's really nothing in its way back to where we put that double top in the past decade. So with that said, we might not get through there this December, but I think over the next 3 years, looking at this chart from a macro stance, with what's been going on around the world with growth slowing, whether it's being propped up by the Fed or propped up by the central banks, you can't fight that. You can't change that. You can only change your approach. Don't be so miserable about it. Stay with it. I think that from a macro approach, I talk about all the time, you have to have a long-term equity plan. You have to put a little bit of money every month into an S&P 500 fund. I do with my wife with a 401k. If you have a son or a daughter that's 3 or 4 or 5, something like that, if you have a decade from here, it'll probably help you pay for college. I do think that if someone put gun to head in 3 years from now, I think the S&P is 300-400 handles higher versus 300 to 400 handles lower. But you got to figure out what it is you're doing here. Are you an intermediate trend player? Are you an active professional? Are you, just someone, not say just someone, because that's not what I mean. I mean, are you someone that's just looking to, be involved in the market, not be scared away from the market, have a plan that could help you long term? Because long term, it's going to work. Even if you were a baby boomer, you still, if you did it month over month over month, even though we're in the same spot we were a decade ago, you cost averaged in on that decline in 2008 or so, you should be still ahead of the game. But if you pick spots where you got scared out, or you pick spots to add into excitement, you probably ruined your average cost. But you shouldn't be doing that on your macro long-term account. As far as your intermediate account, where you're trying to find the best stocks, you're trying to stick with them because there are some at new highs and they're performing well, or you're trying to add some cash flow to an already existing job, there's ways to do that too. Because in the last decade, you've had these huge moves that if you've known how to identify chart patterns, you've been able to make some money with them from the short and the long side while letting the macro thesis work out. And there will be a time when that macro thesis goes through. So anyway, another thing that we're looking at is gold. Gold right now, it's getting back to that area. This is I guess the macro chart. I had that up first. It's held this support. We talked so many times about 148.5, holding in there. So at some point you have this trend line, and then right now this intermediate trend line is knocking on that door again. So if you take a look here at the daily chart, you will see, is this time different? Can it get above? Remember last week it started to look a little bit better once it traded above 155, which was right here, and then it held above it, gave you a quick 3-day move. I think this bar is wrong. And now you have this big resistance area coming in around 157.5-ish. This needs like a wide range, huge bar to brush the shorts back, get them out of the way. Because, all this little messy type stuff hasn't worked out yet. And if you look here, it's actually sort of breaking above this. If you go from this trend line after, remember that day, that was a while back already. This is when, Fed came out, no more QE, it was February 29th, and this huge igniting bar to the downside is what has controlled this move for almost 6 months or so. So at this point, I think guys are foaming at the mouth, me too, that there's some kind of big trade here. I guess if you're more of a macro player, you have to be in some already. If you're looking to trade it momentum-wise, let's hope it happens intraday where it trades above this area and you can catch it. Because the last few times I've tried to be in it overnight, I've just gotten pummeled or it's hurt, all the way across this thing. So this is the first time perhaps it's a little bit above, but it's going to have to really get above this area for that to be any kind of fully change of character. It has not changed character, it's just holding. Today silver actually led the way somewhat. But look where silver is all the way down to holding major support all the way across the board here. And then if you look on a close-up level, silver today had a more potent day than gold. Closed near the highs. It's coming above a level. I would say it's going to have to get above, really this 27.60 to 28 and close with authority. High volume, wide range igniting bar. Get the shorts out of the way. Wake it up. We haven't seen that yet. But again, it's the summer. So with that said, just what I'm trying to get people to do is just trying to be a little less opinionated and have a little less of a thesis. If you have a thesis for a big long time frame, just stick to that plan. And I think that is, I'd rather see you cost average into the markets monthly if you're not going to pick stocks in the S&P 500 and do that over the next 10 years. I think you'll make money. If you're looking to, if you're a small fund and you're watching and you need to, create alpha for your fund and outperform the indices, you better be looking at the stocks, which we've been talking about, that's in off the charts, that have had good earnings, that have woken up, that held the earnings gap, that'll probably lead us if we do trade higher until the end of the year. So you have to be involved with those names. And we also talked about how eBay woke up again, SanDisk acting a little bit better, Qualcomm. So, this Cruise, Sperling's been all over. Look at this guy. Cruise out of nowhere. the stock is trading at new highs. It's like with 33. These things just pop off the map, and this is above the moving averages, closed really strong into it. It's been trending up. It's like a name out of nowhere. I'm not sure what STX is doing, but I think their earnings were a little light. So we'll see what happens. You know, that's pretty much priced for something really good, and at this point, being a little light is probably not good for this stock right here. And that's something else that I just wanted to talk about. Not really talk about, but I don't know why it keeps looking at me. But every time I look at my market views, I have Yahoo there, and the stock is in a very, very long channel. Okay, and really, you don't really have to be in it as a trader unless it starts to take out like 1630-ish. It tried to do it here and failed to close at 16. But I just, for some reason, think at some particular point, this is going to get going again. I don't know what's going to be the catalyst from 14.5 to like just say 16 and change. You know, you're going to get a move to this 18 area. I think it's a pretty low risk trade if you want to have some exposure out there. I think with the Olympics going on, everyone watching it online, and people talking about how the internet is so ahead of you know, televisions, whatever. I do think that if you want to be in a tier 1 in Yahoo and you have the risk tolerance, be in a little bit. I'm not in any, and every time I stare at something a few different times, I should just get in there for something, which I might tomorrow, and it could continue. Like I've had off the charts AOL for the past month. We've been listing it and listing it and listing it, and look what happened here, above 28. I don't think anyone on Wall Street was expecting AOL to be at highs. You had that big gap up with that content deal or whatnot, never pulled in, never filled the gap, stayed intact, shorts basically trapped and funds controlling the float, and here you go. And I don't know one person long AOL. Some guys on the price point sheet bought it. I got some good tweets about it. I didn't even trade it because I didn't believe in it. So with AOL at highs, and you know, and new school media acting better with that big base that Yahoo's been in, I know it's been dead money. At some point, I think it wakes up, and if you don't have a little bit, you're probably not going to see it happen. Yeah, if you're quick, and hopefully I'll be at my desk when it happens, you could do it as it's in motion. But maybe at this point, if you want to, you know, be long a little bit with and have a stop in there, I think it's something that could get going. And we actually are starting to work on a deal with them where I might, you know how they have the show Breakout at lunch. I'm trying to work on something with the morning call, so we'll see. That's inside information. No, I'm kidding. This is not inside, whatever. There's no inside information. I'm just saying that we might have an outlet to put some content on Yahoo also. And what else? What else? Let's see real quickly. People were asking about Starbucks today. Wow. Look at this day on Starbucks. Just this was at, you know, the breakout, which came in real quick, and it's just been, no, it's just not good. Things change. Yeah, now have this earnings gap. I'm not involved. I think next time I'll get involved is if it could trade above this 48.20, kind of like what Apple did to fill that gap. Oh yeah, Apple. Nice 2-day trade. Stock, you know, if you didn't take it into earnings because you thought that it could potentially miss, it did, and now all of a sudden, boom, right back in the game. I'd say short term, you know, let's see if it could do some work above today's low of 587, and at some point, this is going to rock and roll again. We talked about buzzwords. We talked about iPhone 5 September. That was what was going around all day, and that's what gave it follow through. We also talked about not sure which way it was going to break, and I wound up breaking above this 580.80, right, into the close on Friday. So if you were there and you took the trade, turned it into a really nice 2-day trade, closed on the highs. You came in today, you made $4 or $5. Great day and a half. Now we'll see some sideways action, and we'll just, you know, tick it around until finally it tries to break above this trend line, which should come into play, but it's going to probably take a little bit of time. So all in all, in closing, there are things to do. Just look at the market action and try not to read too much into the why, but more into like the what's going on, and then you might be able to act faster and get rid of some of the opinions and make some money. It's been Scott Redler, T3 Live, the recap. See you at the morning call. Have a good night.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to t3live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.